inevitably, the first question that comes out of their mouth is, what's your rates? Hey guys, Sean Bloomquist, Pine Financial Group, where we work together so you succeed. If you're watching this on YouTube, subscribe to the channel, hit that notification bell. Keep up to date on all the content we release every Friday. Today I want to talk to you about 5 questions you should be asking your hard money lender when you reach out to them. We get multiple calls every single day from people looking for hard money financing. And inevitably, the first question that comes out of their mouth is, what's your rates? I can almost guarantee that 100% of the time, that's going to be their first question. What are your rates? And granted, the rate is a big deal, and that's going to be part of the whole thing. But there are actually 5 other questions I think you should be asking before you just jump in to find out what rates are. First question I would ask is, what's your loan to value or loan to cost? You'll hear, LTV and LTC are the 2 terms you'll hear. Loan to value is, are they basing it on the after repaired value, and how much of that are they going up to? Pine Financial Group will go up to 70% of ARV. The other part of that involved is the loan cost. How much will they cover with that loan to value? Pine Financial Group will go up to 100% of your cost if we can cover it all. We'll cover your purchase, your repairs, your closing costs, as long as it comes in under that 70%. There are other lenders that they may go up to 90% of purchase, 90% of repairs, or something like that, and you need to bring the difference to the table, which leads into the second question I think you should be asking. Are there any down payments required? If you get a traditional financing loan, they're going to want 20, 25, 30% down for investment property. If you're using hard money lending and you're trying to leverage as much as possible, are they still requiring you to bring a certain amount down? There are still lenders out there that, even though they're doing a high loan to value, they're still going to want you to bring 10% down or something like that. Pine Financial Group will say whatever we can't cover with our loan to value is the only difference you have to bring. So there's no specific down payment required. But that is a big piece of it. If you've got to bring money to the table, how much am I going to have to bring? That's a big key in your calculations for your deal. Third part of it is, if they're doing the loan to value based on after repair value, which most likely they are, how do they determine that after repair value? Are they hiring an appraiser to go out and appraise the property? Are they doing an in-house valuation? Are they just using your comps and taking your word for it? You want to know exactly how they're coming to this value so you understand how they're going to be looking at it, what kind of comps you should be looking at to help you determine that after repair value, to make sure that you're getting into a strong, safe deal. Another part of it is, how does their draw process work? When you get a loan done, if they're going to be funding the repairs, most likely they're not going to be giving you all the money up front for the repair costs. So how does the draw process work? Do you have to get certain percentages? Do you have to turn in receipts? Do you have to get lien waivers? Those are all going to be integral parts in how you get this thing done and how quickly you keep the process moving. The last question I would ask, is there any prepayment penalties? If I get into this and the term of your loan is 6 months or 9 months or 12 months, what happens if I get done sooner than that? Are you going to charge me a penalty for being done quick? Is there a certain amount of interest that's required over the term of the loan, or am I just in and out and paying interest only as long as I've got the loan? Pine Financial Group, we won't charge you a prepayment penalty. We're only going to charge you interest as long as you actually need the money and are using it. So that's another key piece that could be taking money out of your pocket if there is prepayment penalties or anything like that. So these are just 5 quick questions to ask your hard money lender when you're calling. Justin Cooper does a fantastic class on this. He actually has 10 different questions. These would be included into it, but he goes more in depth on that. It's about an hour and a half class. We actually have it up on our YouTube channel, or he does this class live when we do our classes around town. Be sure to check it out. And if you have any other questions, reach out to us, pinefinancialgroup.com. Thanks.